Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be joined by Gregory Keough, founder of the DeFi Money Market Foundation. Greg, thanks so much for joining me.
Great to be here, Yonah. Thanks so much.
Well, first, you want to give us our viewers a little background, kind of who you are and how you found yourself in the blockchain space.
Sure. So one of the first things, because this is a video, you can see me. So like you notice I'm kind of losing my hair and what I have is gray. So I may be one of the older people in the DeFi space. And so as a background, I've been a fintech entrepreneur, actually going back to the 90s. So when the internet was just coming out, I built one of the very early online financial portals, which gave financial information. And that was acquired by Citigroup. I built also with a team of folks, one of the very first online mortgage platforms. And the kind of its claim to fame was, as you may or may not know, in the mortgage industry, most mortgages are bought in the secondary market by an entity, in this case, Fannie Mae here in the States. And we built the first automated interface into their back-end legacy system. So that one was acquired by Realtor.com. So doing mostly kind of like VC or PE-backed startups. I did one more corporate gig where I was brought in to be the CEO for a venture between MasterCard and Telefonica. Telefonica, who those who don't know, is a large global telecom company. And I ran all their mobile financial services globally. So simply bringing people into the financial system using phones. And then as part of that, I did that for a while. And then I said, I want to get back to the startup space, and kind of came into the blockchain crypto DeFi space because I saw a way that really you could start to change our very, very broken financial system. And that was, how I first got involved.
For sure. Now, you got involved, you founded the DeFi Money Market Foundation. What was the goal with the DMM?
Yeah, so pretty early on, so we worked early on when we were building this. So we started, and we kind of had the idea, we started building, and we were fortunate enough, Tim Draper and the guys at Draper Ventures came in early on while we were building. And the whole idea was pretty simple. I think there's two global problems we have, and I think these actual problems impact every person on the planet. So the first one, and if we're in crypto, I've never had an over this one, but there's general fiat debasement going on, right? So, paper money, I don't want to have a lot of it, but most people kind of buy into that, right? So obviously there's many areas that we're trying to work on that. So that's one problem. But then the second problem actually is there's no way to get any kind of yield or interest, right? Or there wasn't until a lot of DeFi things started to come out, including DMM. And so if you look at it, it's actually a big problem because, for example, when I was the CEO of this joint venture with MasterCard and Telefonica, they were using mobile phone financial inclusion. And there's literally hundreds of millions of dollars in many organizations trying to solve financial inclusion to get people into the financial system. But kind of my pushback on that is, if you really want financial inclusion, the actual system they're bringing them into is broken. So if we look at it, if you're just a normal guy, okay, and you're working away 9 to 5 hard, and you're given this fiat currency, but by the way, it's worth less every day. Well, so that's not so great. But then when you compound it with the problem that, okay, in the past I could take that fiat currency, even if it wasn't great, and put it in an account and earn some interest. Now I can't even do that. So you've actually made the system extremely difficult for anybody to kind of progress, right? So just so I think it's a really systematic problem. And I think the DeFi Money Market Foundation is about solving that. So what we basically do is we offer uncorrelated stable yield of 6.25% off crypto assets. So right now we do USDT, USDC, DAI, and Ether. But all of this is backed up by real world assets that you can view on chain. So it kind of creates this different way and a different way of thinking about, how money could work that I think is more favorable to everybody. And I think it's superior to the current system.
Well, you mentioned that set yield, that consistent interest. And right now we're looking at DeFi and there's yields that are, to the moon. And obviously we'll talk about how wacky that is. But how do you guarantee a consistent interest with your product?
Yeah, so that's kind of so if you look at the niche we kind of play in, it's kind of twofold. One is consistent yield. So it's very steady. We've been at it for a while, and it hasn't stayed over 6.25%. 65% has been stable. And the way we do it is, again, it's backed by real world assets. So these assets can be vehicles, planes, real estate, et cetera, that tend to have a longer term duration to them. And that provides us this kind of stability, but it also provides the backing, right? So it's the actual backing. We can't actually emit more DMM than there is actually assets backing the system. And so if you look at it, we think it's a good way that you can provide this kind of stability that I think is needed, and especially needed to grow the ecosystem and bring in non-crypto kind of native folks, like more traditional investors. I think that one day it's 1%, the next day it's 1 million is very, very difficult for kind of large scale capital to move in.
Well, this is such a unique product, you know, in the space right now. If you look at most DeFi, it's let me take this DeFi product and let me stake it to mint a DeFi product, and then I'll go and yield a DeFi product. But here you're incorporating real world assets, and income generating assets. You want to run me through a little bit of the process of how it works? I have my car, I own this car, or I have payments on it. You want to run me through the process of how I kind of get that asset on chain?
Yeah, so there's 3 requirements for any asset, and it kind of doesn't matter where, either geographically or what type of asset, to be introduced. And they're kind of the baseline for it to be a DeFi money market product. So the first is you must have a senior secured first lien position in the product. And what that basically means in English is that if anything goes wrong, you could take away the asset to recover your money. So that's the first. The second is it must be over collateralized, but in 2 senses. One, it must be over collateralized in value. So if the value is $100, you know, you may be able to get $50 for it in DMM, right? So it's very conservative. And that way, you know, if you get to the worst case scenario, you're not trying to recover the whole asset price, you just need a portion of it, right? So again, provides a lot of mitigation of risk. And then lastly, and this is actually where our governance protocol comes in as well. Lastly, it's over collateralized on an income production basis. So while we pay 6.25%, the assets themselves yield more. And actually what we do with that addition, so they go anywhere from 8 to 11%, it kind of depends. But that additional income that's being generated off the assets actually goes and is burned by the governance token. So we have a governance token called DMG. This oversees, it's a DAO, it oversees the ecosystem on kind of what can and what can't be done. But when you have these assets producing excess yield, the default equation is it just starts to burn DMG. And we actually just did our first burn 75,000 tokens, I don't know, a couple weeks ago or so. And so what I think is interesting about this is, and again, going back to my very first point and like trying to look to rebuild a better financial system for those who want to participate, you notice you're in a system actually that's finite. So there's only 250 million, or there was only 250 million DMG that will ever be available. We just burned 70,000 of them or so. But you have this ecosystem set up where it can't get too far off because you need these hard assets. It does produce this stable yield. And then anything on top of that actually drags down the availability of the governance DMG token, which makes that appreciate, right? So I think it's the kind of setup that is very, very good for larger scale.
And no, this is so interesting because, you know, when I first heard of DeFi, you know, this is going back a couple of years, when you went to a cryptocurrency conference or blockchain conference a couple of years ago. So DeFi was definitely not center stage keynote speaker. No. It was the side room with the 4 guys, you know, and it didn't get the flash. But when I saw it, I was thinking, wow, cool, decentralized finance. You know, if I want to go, you know, get a loan for my business, instead of having to go to the banks, the traditional system, I could kind of go to the community. I could go to this decentralized and open it up. You know, I'm a capitalist free market guy. Let's expand the market of which I could receive loans. And the main use case for DeFi so far seems to be this yield farming, this kind of speculative device that isn't quite, you know, what I envisioned. Is what you guys doing similar? You know, like you said, if you're actually using real world assets, could I go to the DMM and put my house as that real asset and get a kind of DeFi mortgage?
Yeah, so the way it works is, so in essence you can, but it's done actually through, in order to introduce assets into the DMM ecosystem, you need to either be a principal affiliate member. And so we're actually, in the not too distant future, you're going to see the first, one of the first use cases of this, which is exciting, where, you know, you have people who are experienced generally, you know, in this business. They could be private equity, they could be hedge fund guys, et cetera, have funds. But again, remember those assets must feel they must have those key ingredients I spoke to. And so when you're a principal and affiliate members are broken up by country, and there's a limit to them. And in order to become one, to introduce assets into the system, you must have a certain amount of DMG, the governance token, that you hold, because that way you have skin in the game. So if you introduce assets that are crappy, you will lose your money up in that's staked in DMG, basically, right? So we want you to have skin in the game. But still, it will be voted and approved by the community to make sure that this works. And so our goal is in the protocol is to provide like a framework where anybody, so getting back to your specific scenario, you could get a group of folks together. You could become affiliates or principal members, which is basically you having enough D tokens to like reserve a country. And then you could be the gatekeeper to say, okay, these come in. You also have other benefits where you get additional like percentages that go through the system, et cetera. So yes, the short answer is yes, anybody can do it. You do have to follow the guidelines and rules by the DAO, but those are kind of what I told you, and they're kind of just making sure it doesn't go sideways. But the idea is globally, if you think about it globally, capital is not efficient where it goes, right? So there's plenty of great business opportunities internationally, right? That just for whatever reason, pick the States or Europe, but there's fantastic things that will fit this in other countries without the world. And also they probably have challenges getting capital, but it isn't actually because the product doesn't deserve cap. It's merely because the system is kind of lazy and like, oh, I just want to stay in Europe or the United States or Asia because it's just easy and I can make enough money. So I think that's an important part of the ecosystem is the introduction, which you'll see shortly here, of these players that are going to be doing this as a role in either a principal or affiliate members in different countries around the globe.
And now, you know, traditionally when we're looking at, you know, traditional lending and borrowing, so obviously your return is usually going to be correlated to the risk. You know, the riskier the loan, the higher the return will be as well. And right now you guys are locked in that APY. Do you foresee a time where you offer either instead of or in parallel a more flexible return, say, hey, I see an asset that might actually be more risky. I'm willing to take this risk for a higher return, or the opposite way, I want a more conservative return, but a less risky bet?
Yeah, no, that's an excellent question. I see we're at the very beginnings of this, but I think it's going to bifurcate where people actually are going to create their own kind of, I don't want to say mutual fund, but like their own strategies. So you could see it very easily develop, you know, do exactly what you said. Again, they're still going to have that basis I talked about. Those 3 points are always going to be essential. But as you said, it might be like, okay, it's like kind of a wacky asset. I can't think of one off the top of my head, but there is more inherent risk, right? But I'm getting a ton more return, but I also know I can still get the asset back. So what I think we're going to see is that that this is going to develop, and you'll get that kind of, you know, diverse opportunities that'll go right now. But I think we will stay with the idea of the three principal attributes to introduce an asset. I don't think that's ever going away. And then the other thing you will see is that the opportunities will vary by country, right? So in some countries, it could be a house and you might get a great return because there's maybe country risk in the house, right? So it's a little bit what you talked about, but the house could still be like $100,000 house that you have $10,000 into. So I think it does develop into, as you kind of project it out, as this thing goes to scale, the DMM ecosystem, I think you're going to see people building through the DMM protocol, kind of these interesting new financial products that could say, okay, you want a little higher yield. Are you willing to accept, let's say, you know, maybe different geographies that are more risky? You'll get higher yield. We will continue with consistent yield because most of these things are contractually, you know, a year, a couple year terms. So you do get that level of consistency, which is one of the hallmarks of the DMM ecosystem, right? It doesn't go, you know, 1% and then, you know, 30% the next and then down to 0.5. And I think that's a need in the space to develop and grow the DeFi ecosystem.
For sure. Now, you know, I'm sure this must be a headache for you guys, or I mean, and you could tell me, where especially now that you're incorporating real world assets into the equation, and also even other countries, what kind of regulations is needed here? I mean, with just traditional DeFi regulators, I mean, you start talking to them about sushi and yam and you confuse the hell out of them. They don't know what to do, but I think they do understand real world assets. What kind of regulations do you guys have to uphold here?
Yeah, so obviously we're looking to, you know, be compliant with all regulations, and you get to country by country basis, it's different. The good news is there's a structure that exists in traditional finance whereby like the two of us could get together, we could form a limited liability company here in the States or many other places, and we could lend somebody money. And that's actually totally legal. I mean, it's not, you know, governed by the SEC or anybody else. And so I think part of it is looking at how to, you know, put these things into structures that kind of already exist. I think the protocol level, really, you're interfacing with an actual protocol, right? That these underlying assets are visible, you know, they're kind of behind the scenes, and we use Chainlink, which actually is a very important part of what we do, because again, it's absolutely essential to have these third-party trusted oracles on, so you can see the liens, so you can see, all the valuation, all this different information is available through our partnership with Chainlink, because it's an essential part of the ecosystem, and you can then put the kind of the guide rails around the ecosystem, right? You can't get more DMM if there aren't assets there that have the adequate collateral. And so that's an important part of what we're doing. And if you look at like the traditional system, you actually see none of that. Like, so there's literally billions of dollars of debt being sold, and they say, and they tell you what's underneath it, but you don't ever actually see it. And certainly you don't see in the granular detail that DMM does. And quite frankly, had there been a system like DMM with that level of transparency where you see all the assets, the liens, et cetera, the mortgage crisis probably wouldn't occur, right? Because you would have a view into like, hey, wait a second, there really isn't a mortgage behind that, or it's incredibly risky. It's really not the right value. And so I think these are kind of learning elements. DeFi is kind of bringing more transparency and kind of the trustless nature of it. I think is just very beneficial to everybody.
Well, I mean, while you were speaking, I literally thought of that same example as you said it. I mean, if you had this technology back in 2007, 2008, I mean, you could have avoided the entire subprime mortgage crisis, where you wouldn't be able to get away with falsely classifying and grading, just shitty loans, shitty mortgages. So do you see that happening in the future, where so far it seems quite cyclical, when it comes to regulators and traditional finance, where regulators make a new regulation, traditional finance makes a new type of financial instrument that gets around the regulation and lets them play dirty for a while until it explodes. They get caught, they get a slap on the wrist, and the cycle kind of repeats itself again and again. I mean, nothing happens. It seems like the taxpayer and the end consumer is the one who has to foot the bill again and again. Do you see a future where this technology, especially, kind of the platform you guys are working on, gets to the point where the people, the regulators, all parties involved say, okay, wait a minute here. We realize when there's a lot of money involved in anything, people get greedy. They cannot be trusted. Instead of trusting the people, let's put this framework onto a blockchain. Let's utilize code and so that the computer is in charge of keeping honesty, and they have no skin in the game. It's always going to be honest. Do you see a potential future like that?
Yeah, I mean, I think that we're going, and we're definitely going to get there, in my opinion. And I think, we're one of many other initiatives that'll hopefully start to pave the way. I do think, however, we're working against huge entrenched global interests, right? By very, very large incumbents. And they generally do not change unless they have to change, because quite frankly, for them, the system works fine. But I do think that as you look at the bulk, like at least here in the States, we're on the cusp of a very large change. Who will be the main investors of tomorrow? And they're going to be millennials. And if you look at kind of what they want in investment products, actually, it's not anything like what we're seeing right now from traditional finance, right? And I think this is going to be likely, because again, the incumbents will go where the money is. So if all the money migrates and says, well, wait a second, I want digital currency. No, I don't want that. They're going to have to migrate. And I believe that will likely be one of the catalysts here.
Well, let's shift gears for a moment. You mentioned the DMM DAO that kind of controls this whole thing. How does it work? What decisions is it in charge of? And we'll start from there.
Yeah, so the DAO is basically, it's called the DMM DAO, and then the governance token is called DMG. And so we have votes off pretty much everything. So if you want to do anything, it needs to go through a vote for the most part, except minor changes in kind of code and things like this that are relevant to the overall ecosystem. So we've had votes on introducing, let's say, USDT. People said they thought we should introduce USDT. We voted, we passed it, we launched it. As well as like right now, actually today, there was a thought putting out on like how we integrate other tokens, in this case Link, and how to interact with them in our ecosystem. And so it's put out there, people discuss it, and our community we're very, very fortunate that we have an active community of folks in the DMM ecosystem, and they're very, very smart. And so they have tons of great ideas. And this is one of the benefits, again, traditional corporations don't have, is like from a governance perspective, we have all these people who are holding DMG tokens and want to guide the ecosystem, and we vote, and everybody's a vote, you have more votes, obviously, the more DMG you have. But like, there's tremendous amount of like, a pool of knowledge that's, global to tap into. And that's the superior model. I think it's another thing we'll see more and more DAOs, because getting and being able to tap into this global knowledge base, and corporations don't have that. They had that guy who's the head of X department or X product development, and he kind of thinks things up and talks to people and does well. But here we have this group of where everybody can control openly, and it's all, you can see it, it's all transparent, it's all, you can read everything about it. And I think it's just an improved way of doing business, and a lot of times we get approached like by VCs, women and things like that. They will listen. What you do is you just go and you participate in the DMG ecosystem. You don't come to us because there's nothing more I can tell you that isn't already out there, because it's a DAO. Yeah. And so I think that's a great way to operate. And I think it's the beginning of a very, very large trend in these in DAOs.
Well, I mean, that's what I also would love to pick your brain. Your thoughts on how good of a system is a DAO for efficiency and fairness. I mean, everyone's voice does get heard. Everyone who has a vote does get heard. But, in all situations, in all businesses, is it always better to have kind of a spread decision? I mean, look at Elon Musk. I mean, I think particularly, for him in Tesla, it works great that he has a vision. His word is final. And he kind of, takes it where it wants to go. Obviously, DAOs have a lot going for it as well. So where do you fall on that DAO? I mean, is that the best way to run an organization?
Yeah, so a DAO still is obviously in its very early stages of kind of like experimenting with, right? So, I mean, there's no doubt about that. And there's definitely, as you say, there is a point to saying, like, if you want to go quickly, right? This kind of command and control, we're like, okay, maybe listen a little bit, then I just make the decision, go. Now, if you're making the right decisions, like Elon Musk is many times, that's great. If you're making crappy decisions, that's really bad. So I think it's some, medium ground, but I think what we've seen, at least, again, is I do believe it's the model, it's the model. But I also believe that if you communicate, you get more ideas than you may have had just by a small team by yourself, certainly, by working in that way. And I do believe at the end of the day, if people vote, people generally are, if they're following it, they're involved and they're voting, we're kind of all in it together. Whereas Elon Musk, many times, while he may make the right decisions, I know there's conflict sometimes with shareholders. I'm not saying it's correct, but just because like they want to feel like they can tell them what to do. And in any case, if you want to tell everybody what to do, you just need to own all the, like, as much DMG as possible. And you could actually do that at some point. Right. So, it's definitely at the beginning, but I do think it's a way of the future, especially in like, as we get into a more and more global, more and more digital workforce.
And what are your thoughts kind of on DeFi as it sits now? Because you guys are doing something, I would say, relatively unique in this sphere. When I look at, the Uniswap, SushiSwap, pickle, yam, jam, hamburger bun, I mean, it seems kind of crazy right now in DeFi, and it seems to be a very geared towards a speculative speculation, yield farming. Do you see that as a kind of a necessary aspect of any new technology and market, just to bring in capital and let the real innovation happen, or is this something, let's say, a little bit more, I want to say nefarious, but a little more greed driven, kind of like we saw the negative aspects of the ICO boom in 2017?
Yeah, so I think that it's interesting because when we kind of did, our governance token was done on a decentralized exchanges, several of them. We were very, very early before kind of everything kind of got to the frothy nature it is now. So I think it's interesting. I mean, I think it's good. Obviously, there's limits to everything. So, I think it's relatively frothy now. But I do think this experimentation is good because you are thinking about new and different ways to do things, which I think is important. But I do think that there's probably more inherent risk that just people need to be aware of. And I'm very much a capitalist. So I believe that, you should do your investigation, figure out if you do or not, and also be prepared to pay the consequences depending on if you make a good or bad decision. And I think that's very much DeFi. That's part of the reason I love the space. So I think that, it's good because you're seeing very creative things. And I think but my guess is they'll merge in many of these things to other use cases that may align more with, you're kind of seeing technology that's really cool and ideas that are really cool, but I don't know whether they're sustainable for the next 50 years, right? And I think, but I do think you're going to learn things from all these things and then morph into things that are really important for the next 50 years. It's just hard to see. I think what we're up to at DMM, it's kind of like we looked at this very fundamental problem at the very beginning when we started off and said, how do we fix this? And kind of we're mono-focused on that. And I think, and there's a lot of these technologies that people are doing and using, et cetera, that we're going to interface with because we see it could benefit our ecosystem. So, it's kind of the answer is yes and no, I guess. So it's hard to say, but I do think all this creativity and creative destruction is a good thing.
Well, I mean, all this DeFi craze has kind of highlighted, I think, a unique, or not a unique, but an infrastructure issue where that is that Ethereum has not been scaling up to the demand of DeFi, and gas prices are through the roof. But you guys actually have integrated delegated payments on the Ethereum network, so users don't have to pay gas fees in the form of ETH in order to perform transactions. How does that work? Are you guys taking on the cost, or are they paying in other assets? How does that work?
Yeah, so we have some, because we're over collateralized, as you probably remember, we have some ability to help on that. And then the other point I would bring out is there are gas costs for votes. And so sometimes we do get pushback, right? That like, hey, that cost me $5 to take that vote. And I don't really like that. And I see that as, it's for a DAO, that's like, I don't like, that's problematic, right? Because what you wanted is to be like, totally frictionless. Everybody gets to say what they want. There shouldn't be a real hard cost to that. And so I do think that's one of the challenges we have. But I do like, as we know, it's being worked on, and hopefully these improvements come quickly because those are essential items to like grow really scale, right? Having it so it's very efficient, those types of transactions.
Well, I mean, so has there been discussion in the DAO, or have you guys talked amongst yourselves kind of about saying, okay, right now it's working, we're on Ethereum, but Ethereum is really kind of holding us back. Is it talks about kind of migrating over to another chain that doesn't have those high gas prices?
So we've approached by other entities to build upon them as well, and I do believe over time you'll see us on multiple chains. But I think right now we're focused on Ethereum. It does have those challenges, but we are one of many people who are confronting the same challenge. So I think we're kind of focused on trying to get scale. It is it's great. Obviously, there's tons of volume and traction already, but I do envision that eventually we will be on other chains as well. Yeah.
Now with this DeFi boom, it does seem recently like we see trends pop up, and I think that SushiSwap copying Uniswap and then adding a governance token, I think that started a new trend because people saw how successful SushiSwap was at the beginning, and so now it seems like people are kind of just adding governance tokens to kind of just draw people, kind of like the utility tokens of 2017, where it kind of it seems like in a lot of places, I mean, you guys did it way before everyone else did it, but it seems like nowadays it's kind of being tacked on, as just a draw that might not even have real value attached to it. And so I think that brings us back to the main issue, and in my view, of the ICO boom, which was a lack of equity. It's totally fine to invest in products that you think would be successful, and then they are successful and you get to reap the rewards. But that was lacking there in the ICO boom. Is that lacking here as well with DeFi? Are we still lacking this idea of equity or being able to actually gain value? Does a governance token equate in value to real equity?
Yeah, so I think it's a good question. And I think it depends whether the governance token is like an afterthought or an essential part of what's going on, right? So I think in many cases, as you stated, it's an afterthought, right? So it's kind of like, oh, we should probably have that because there may be other bits. I think in the case specifically of DMM, right? Like it's an essential part that was there from the beginning of what we're doing, because to introduce assets, right, you need something at risk. Therefore, these governance tokens have a right of over saying what should be introduced, right, into the ecosystem, so that we're not, it's not harm system. So it kind of depends, say, just like, is it an essential part of what's going on, or is it an afterthought? And so I think when it's an essential part of what's going on, that makes a ton of sense, right? And that's actually a model that can really be replicated using the kind of older school ways of doing things. If it's just kind of window dressing because it sounds nice, yeah, it's probably not a great thing, I guess.
And you know, so that if a real governance token, you know, that actually gives you a say in the direction of the organization, in the direction of the foundation, as well as some governance tokens as well get you, you know, revenue in the form of trading fees and other network fees. Does that essentially then make it an equity token? Isn't it then, you know, in the eyes of regulators, is that just a share in an actual company? I mean, it enables you the same actions, does it not?
Well, I guess it not necessarily. So again, you could own a share of Tesla, but you're not telling, as we already identified, you're not telling Elon Musk what to do. And you could even own a lot of those shares and still not tell him what to do, right? So you don't really have a direct way to vote and say, Elon, I don't want you to build that car or build, like, you know, a rocket ship to, you know, wherever. There is a fundamental difference in that sense. And the other thing is, are you, you know, basically, what is your motive behind acquiring it, right? Is your motive behind acquiring it to try to generate, you know, wealth, or is your motivation behind acquiring it try to, you know, govern a protocol? So yeah, and I mean, definitely this is, you know, we're kind of, you know, clearing new ground here. There's no doubt on all projects in the DeFi space. So I don't think anybody says they have the total crystal ball on it. But I think it depends a lot. It goes back again to a lot of the way that the token is used, right? And so I think the more it's embedded in the underlying kind of ecosystem and it's like fundamental in the way it works for like reasons that make sense, I think you're probably okay. I think if it's just like you know, window dressing that you drive value up in, maybe it's not the same thing, I would think.
Mm-hmm. And, you know, you mentioned, you know, that you kind of got your start, or you were heavily involved, kind of like, you know, when internet was young, when these kind of the internet boom was happening, and many people draw parallels between blockchain and early days internet, and where we are right now and early days internet, and the fact that it's just so young. You know, it's such a new technology. It's very misunderstood. There's only a few people who really are, you know, are on the inside, and even the people on the inside really aren't able to fully or have a clue of where this is all going to go. I mean, at the early days of the internet, who knew, you know, what email would even be, or Google or Amazon or Facebook? So same here too. What lessons that did you learn from the early days of the internet that you think could be applied today here with blockchain?
Yeah, so I'm going to totally date myself here. So, you know, for the internet, I remember when I had links, it was a browser. It was like a command line browser. This is before Mosaic and Netscape and all that stuff. So like I was on relatively early. And so I think it's interesting, but I actually think this is bigger. And for a couple of reasons. But the way we're going to grow will be different, in my opinion. So in the internet going back, kind of the idea was everybody could kind of understand. You say, listen, kind of communication is going to be instant, global, and free. That's kind of basically what's going to happen, right? And so you're going to get a lot more access to information, talk to people whenever. So you could kind of just sit down with anybody and kind of tell them that and say, hey, they could kind of get it. I think the challenge we have is that it's not so simple, right? So you need actually, it's more complex how it's working, or it's harder to distill down to that very easy message I gave on the communications front. So that's one of the challenges. But with that said, I think that people are dramatically, and I mean really dramatically, underestimating what's going to happen here. Like we are going to see companies come out of this that are much, much bigger than Amazon is, much bigger than, you know, Facebook, much bigger. Like they're going to dwarf those companies, in my opinion, because you're talking about a fundamental reset to the way things work, right? The internet was an improvement over community. We had fax machines, right? Which, if you don't remember, you put a piece of paper and it came out the other side. So we had telephones. It was very expensive to call. So this is, but here you're talking about kind of a rethinking of the way the world works, right? And specifically for us in DMM and the people looking at financial products, I mean, you know, there's right now $17 trillion in negative yielding bonds globally. That's a lot of money, right? And there's $94 trillion in kind of just currencies around the world. So if you're starting to disrupt systems of that size and it works, these things can be incredibly large. And so I think you have, as you say, there's a group of folks who understand and are working on all these very novel things that are kind of the rail that'll make this new system work. And as it starts to gain scale and work and bring, and again, I think the millennials are key in this, or the younger people, because this is the type of products they want. I think I think it's going to be astonishing what happens. Like, I think people are dramatic, as they always say, people overestimate what's going to happen in the short term, and dramatically underestimate what's going to happen in the long term. And this is definitely one of those instances, in my opinion.
Wow, I mean, those are big claims, and I'm excited if it's true. I'm excited to get in on the ground floor. That'd be awesome. But you know, when you're going up against massive established institutions, whether they be tech giants or whether they be, you know, big banks and regulators, there's going to be pushback. So do you think that this growth, I mean, if it is inevitable, this DeFi growth driven by blockchain, do you think that will happen within regulation and hand in hand with regulators or will it kind of be that you know, I don't want to seem too conspiratorial here, but if the real people in power and the institutions feel and see this threat coming on, they're going to do everything they can to make sure that regulation stifles this. And will this happen outside of regulation?
Yeah, it's a good question. I think a lot of it also depends on, I think, what happens macroeconomically, right? So I think that, like, again, if you told me 10 years ago when we had the crisis and we printed all that money that basically nothing would have happened, I would have bet against it, right? I mean, and there's a reason Bitcoin was invented, right? And so I, however, believe that, like, now, and if you fast forward to today, with all the quantitative easing that's went on globally, all the like we're in so much worse shape macroeconomically today than we were even during the crisis, right? If you just look at the huge of debt, I think that most people have realized, whether they'll say it out loud or not, I don't know, but like, most of that debt is never going to be repaid. So that is a fundamental difference. So if that debt isn't repaid, it means it has to be restructured or something has to happen to it. But it is a catalyst for people to start to just say, whoa, wait a second. This is a major reset. Maybe we should reset into something different. And I believe that is likely what will occur. And it may not occur on the government level or the institutional level initially, but if the consumers do it, and it's different, and it's the consumer will do it. The consumers are incredibly savvy globally. They're very savvy on what's going on and how to best kind of defend their interests. And so my feeling is that you'll see a huge acceleration of all these trends if that event happens. Now, if that event may never happen, I don't know. I believe that I just don't see how we could have some repercussions for all these things we've been doing over these years. But certainly I would see that as a large global catalyst to reset the system. And I do not see that as like a totally outlandish projection based on the data I see, at least.
And based off the data you're seeing in your own professional opinion or personal opinion, it's okay, I'll accept either one. What kind of timeline are we looking here? Because I mean, the internet took a while, let's say, to really hit its stride, but technology, just innovation happens so quick today. I mean, it seems like every week there's an entirely new game-changing thing. So will this happen just way quicker than what we've seen with major technological shifts in the past, like the internet?
Yeah, I believe, at least personally, it's going to happen quicker. I mean, I think one thing is the catalyst you could have. So again, if you have that catalyst, you'll go even quicker. I mean, I think we're going to go quickly already. And obviously things are developed, and just the compression of technological advancements has gotten much more tighter, right? Due to Moore's law and a bunch of other things. So I think that you'll see it happen quicker, much quicker than the internet, because I do believe, one, that just we are in a different time where things are moving quicker just in generally. But secondly, I think you'll have that macroeconomic push. And then the third thing I think is, in talking a little bit about kind of the status quo, you can now Google pretty easily, and you can find lots of people who are like Ray Dalio and others who are telling you, like, cash is not the greatest thing to hold, right? And they're saying gold. They may not say Bitcoin, but they say gold, and they say other things. And I think, like, that's a fundamental change, right? So you're having institutional people saying, like, I want to de-lever out of fiat. And I think that's the reason you see real estate's going up everywhere. People, as I say, people are very, very shrewd. And I think that these are all tendencies that are very bullish for DeFi.
Well, I mean, it's kind of the perfect storm. I mean, any early Bitcoin lover has been, yelling at the top of his lungs to his friends for years saying, hey, you don't realize the government controls the supply of money and they could print as much as they want. This will cause massive inflation. And the friends are probably like, up until now, probably like, yeah, okay, crazy person. Like, yeah, we get it. We heard it, go back to your fake money. But I think now, especially with Corona and the governments around the world with their fiscal stimulus, just printing obscene amount of money with no added value underneath it. I think even people who aren't, financial economic experts are starting to listen to that old crazy friend who was yapping about Bitcoin, saying, wait a second, there might be something here. We might not necessarily, maybe we shouldn't be trusting our governments, or maybe our governments don't have our best interests at heart. When they're kind of manipulating their own money. And I think that ties directly into U.S. versus the world, because anyone who's been following global economics since World War II, the U.S. dollar has been the global currency, has been the currency in which countries interact and transact with each other. And I think in recent years, I think for the first time, the majority of of transactions in China and Russia are not in U.S. dollar for the first time ever. I mean, I think even governments, foreign governments, are starting, just like you and me and people are talking about, are starting to realize, saying, whoa, maybe we don't want to let the U.S. government keep on printing money, because at the end of the day, the U.S. government's the one who's gaining from here. If they're able to print all the money and it's the global money, we're going to see a decoupling. So do you think that will spur governments around the world either to lean into their own CBDC, a central bank digital coin, or even kind of it could be Bitcoin, but it doesn't have to be Bitcoin, or more of an algorithmically controlled international currency?
Yeah, no, so I think you see part of what you're saying is it's not just those items. Also, gold is being pulled out of, and I mean physical gold. I don't mean like that. Like people, like countries have been telling the federal, the holders of gold in this country, we would like our physical gold back. And if you actually look at those shipments, they're incredible. And they're going back to their home country. So that tells me something. When other governments are saying, I would like to have gold. I want gold is interesting, right? So I'm not a net seller, I'm a net acquirer. And then the gold I have, I actually want in my own vault. That tells you something. Gold is not the kind of thing you move around cheap or easy, right? It's heavy. So I think that's very, very telling for me on what's coming. And I do agree with you that the reason we're still going, at least in the States, is that we have the ability to print the money, right? We have the printing press. If we didn't have the printing press, I believe there probably would have been a correction already, right? It's one of the benefits of being the global default currency provider, right? But that can't last forever if it's not managed prudently, right? And unfortunately, it doesn't look like we're on the road to manage that prudently, because it really is a privilege, right? So, and it's sooner or later, right? If that happens, where it's no longer kind of the currency of choice for global trade, then all bets are basically off. I couldn't really tell you what would happen, but it certainly wouldn't be good for the United States, and it would probably be very, tumultuous for everybody in the financial system. So yeah, I mean, those are definitely the trends. And if you look at, again, as you say, I think you're correct that the coronavirus and the COVID and all the spending and globally has woken people up to the idea, like, well, wait a second, yeah, there is something to this fiat debasement. But I always tell people, kind of the most basic example of this is, 100 years ago, Henry Ford had a bunch of guys working in his factory, and they were putting together cars. And he used to pay them 65 ounces of gold a year. That's the value he would pay them, 60 ounces. And so remember, there were no government mandates, there's no unions, there was no wage laws, none of that stuff existed. So that's many more times than what the average worker makes today, right? So the average worker in the US at least makes about $33,000 a year. So half the people make about that. So you're talking about, that's like, was 11, let's say it's $2,000 an ounce, more or less. So you're talking about making like $130,000, Henry Ford's work factory with no college education. And then the average person today in the United States makes, 33,000. That tells you there's a fundamental problem in the system, right? And as you say, people have woken up to this even greater due to this kind of enormous quantitative easing and loans and everything else going on in the global environment. And that's going to be a huge catalyst for adoption of DeFi and crypto, et cetera.
Now, the reason that we're kind of holding this conference is because of the COVID pandemic, and many students are stuck at home. And many are watching this today, and that's kind of why we're holding it for them. What would you say to kind of, college age students, out there who are watching this and are interested in this technology, interested in this, I would say, revolutionary technology that has the potential to really change fundamental systems that we've taken for granted our whole lives. What would you say to them, what would you recommend to them kind of if they're interested in this technology, if they're interested in finance? Are there certain things they should be focusing on? What do organizations like yours, and you've been startup, you started many startups. What do you look for as an entrepreneur in young students coming out of college?
So I think it provides a fabulous opportunity for young people globally. So the first thing, it's global, right? So we have people all involved in our project all over the world, right? And we don't, if you're smart and you're good, we'd love to get you involved. We don't care where you're from or, what you do. We don't care about anything. So if you're smart and good, we'd love to have you aboard and help us and work with us. So, so opportunity is global. The second is, you can't go to Harvard and learn DeFi. All the people that's I joke because there's many, as we know, there's many younger people, not even in college, that are very active in this industry. Now they could go and teach the course at Harvard, but there's nobody in Harvard who's going to tell you anything about DeFi that you know what I'm saying? So how do you learn and how did everybody learn is they got involved in the ecosystem, started reading, learning, testing, taking money, put it in the system, and it's such a fabulous opportunity because literally you can kind of buy it. You have to have the intellectual curiosity, certainly, but if you have that, you really could do I think incredible things. And there's also, and that's just to learn about the ecosystem, but there's so many opportunities that as we're building the rails of what I think is the future, you could actually, if you learn enough about it, start to think up your own ways and improvements in the system. And this a lot would happen on the internet as well, right? So you had all these companies and people kind of doing really cool stuff, but a lot of people, it wasn't kind of out there entirely yet. And so I think it's an opportunity for young people who are interested in this space to get actively involved because again, you don't need to take a course. You don't need to go to school. You can read and learn and people are pretty open in talking to others. You do need to come up a learning curve to a certain degree, obviously, but it is a very unique opportunity. So, and again, I have 5 kids and I have a couple of them ready to go to school. I've, one wanted to be in a hedge fund. I was like, a hedge fund's not going to exist. You want to be in DeFi.
Well, Greg, I really appreciate you taking the time to speak to us and the viewers, about the great work that the DMM Foundation is doing and kind of your vision for how much potential there really is here. So once again, I do appreciate you taking the time. And for all our viewers of Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.